Did you know that 85% of Americans feel anxious about their financial future, despite having a stable salary? The truth is, your paycheck is often a trap, designed to keep you trading time for money. It's the biggest lie in wealth building. While your salary might grow by 3–5% annually, inflation often eats 2–3% of that. Taxes take another 20–35%. You're running on a financial treadmill, barely keeping pace. Real wealth isn't about how much you earn, but how much you keep and grow. The true path to financial freedom, as seen by Wall Street titans and Silicon Valley entrepreneurs, lies in owning assets. These are things that generate income or appreciate in value without your direct labor. Think stocks, real estate, or your own business. Consider this: from 1990 to 2020, the average US salary increased by about 120%. But the S&P 500 index, representing broad market assets, surged over 800% in the same period. Your salary grows, but your assets can explode. This isn't about day trading or getting rich quick. It's about strategic asset allocation. Putting your capital to work in diversified investments like ETFs or dividend stocks, allowing them to compound over time. That's the Warren Buffett approach, not speculation. Imagine a tech worker in Silicon Valley earning $200,000 annually. If they only save cash, they're losing purchasing power. But if they wisely invest in growth stocks or real estate, their portfolio could generate $2,000, $50,000 in passive income annually. The magic of compounding is often underestimated. A consistent investment of just $500 per month, yielding an average 8% return, can turn into over $1 millions in 30 years. That's the power of time and consistent discipline, not a higher salary. Behavioral finance teaches us our emotions are our worst enemies. Fear of missing out FOMO leads to buying high, while panic selling leads to selling low. True investors, like Ray Dalio, focus on building robust portfolios that weather market volatility. Diversification isn't just a buzzword, it's risk management. Instead of putting all your eggs in one tech stock, spread them across an S&P 500 index fund, international equities, and maybe some bonds. This protects your wealth against individual company failures. Beyond traditional investments, consider building your own income-generating assets. A side hustle that evolves into a small business, or intellectual property like an online course, can provide significant cash flow and equity, accelerating your wealth journey. Don't overlook tax-advantaged accounts. Maxing out your 401k or Roth IRA not only reduces your taxable income today, but also allows your investments to grow tax-free or tax-deferred. This is critical for building generational wealth. In the spirit of Silicon Valley, understanding innovation and growth sectors is key. Investing in disruptive tech, either through individual stocks or specialized ETFs, can offer exponential returns. But remember, higher potential returns come with higher risk. The FIRE movement, financial independence, retire early, is built on this principle. It's about aggressively saving and investing early to build a portfolio large enough to cover your living expenses through passive income. Imagine retiring in your 40s. The salary lay keeps you dependent. The asset truth sets you free. It's a fundamental shift from trading your precious hours for a paycheck to owning income-generating machines that work for you 24/7. This is how real wealth is truly built. It's time to stop chasing paychecks and start building your legacy. Begin by allocating 10–20% of your income to diversified assets. Educate yourself, stay disciplined, and watch your wealth grow independently. Your future self will thank you. That 10–20% you commit isn't just saved, it's activated. It's the seed money for your financial garden. But where do you plant these seeds to truly grow wealth beyond your wildest salary expectations? The S&P 500 has averaged nearly 10% annual returns over the last century. That means every $1,000 you invest today could become $10,000 in 25 years, purely through the power of compounding. Don't underestimate it. But stocks aren't your only game. Real estate, for instance, can provide both appreciation and rental income. Imagine buying a property for $300,000, seeing it appreciate to $500,000, while tenants cover your mortgage. Or consider building a business. A tech startup, for instance, can scale exponentially, creating immense equity. Think of the early employees at Google or Meta whose stock options turned modest salaries into generational wealth. Even your skills and intellectual property can become assets. A successful software developer might license their code. A content creator builds an audience that generates recurring ad revenue. Your mind is your first asset. Leverage, or good debt, is another powerful tool. A mortgage to buy a cash-flowing rental property is smart. High-interest consumer debt for depreciating goods is wealth destruction. Know the difference. The ultimate goal: passive income. This is money your assets generate while you sleep, travel, or pursue your passions. It's what truly frees you from the salary lie, allowing you to make choices based on desire, not necessity. Building wealth demands emotional discipline. The fear of missing out, or FOMO, drives irrational decisions. When Bitcoin surged to $69,000, many bought at the peak, only to see it plummet. Patience is your most valuable asset. The greatest cost isn't what you lose, but what you miss out on by not investing. If you delay investing $500 a month by just 5 years, you could lose over $100,000 in potential gains by retirement, purely due to lost compounding. Smart wealth builders also leverage tax advantages. Maxing out your 401k and Roth IRA isn't just saving. It's optimizing your tax burden, letting more of your money work for you, not the government. This is essential. Diversification isn't just about growth, it's about protection. When one sector falters, like tech did in 2000, other assets can cushion the blow. Don't put all your eggs in one basket, especially if that basket is a single hot stock. The long-term mindset triumphs over short-term speculation. While day trading can offer quick thrills, data shows over 80% of day traders lose money. True wealth is built patiently, not on daily market noise. Think of it like planting a forest. Each investment is a sapling. You nurture them, give them time, and eventually, they grow into a towering forest providing shade, shelter, and endless resources. Your financial freedom. But you don't have to navigate this forest alone. Seek out mentors, read books by financial giants like Benjamin Graham, or follow channels dedicated to behavioral economics. Continuous learning is your compass. Remember, your salary is a tool, not your destiny. It's the fuel to acquire assets that truly work for you. The choice to stop being a salary slave and become an asset master is yours. It begins today. Your paycheck is merely fuel. The real strategic move is where you allocate that fuel. Are you funding depreciating liabilities, or are you aggressively acquiring productive assets that generate income and appreciate over time? This distinction is paramount. Many chase the next shiny object, swayed by media hype. But genuine wealth creators understand intrinsic value. They analyze cash flows, market share, and competitive advantages, not just daily price fluctuations. That deep dive is where true opportunity lies. Consider the S&P 500 historically. It averages over 10% annual returns. Missing just the best 10 days over decades can slash your returns by half. It's not about timing perfection, but consistent presence. Patience often outperforms prediction. The fear of missing out, or FOMO, drives irrational decisions. You see a stock surge 20% and jump in, only to buy at the peak. This emotional roller coaster erodes capital. Discipline, not emotion, dictates long-term success. Instead of trying to catch market bottoms, adopt a systematic investment approach. Regular contributions, regardless of market sentiment, average out your cost. This disciplined allocation to growth assets builds substantial equity over decades. In Silicon Valley, true wealth is often forged not through a salary, but through equity in disruptive startups. Imagine owning a piece of the next Google or Apple before it goes public. This access to private capital markets is a game changer. While highly risky, early-stage investing offers asymmetric returns. A single successful venture can generate 10x, 50x, or even 100x returns, dwarfing years of salary. Diversifying across several startups mitigates some of that inherent risk. Beyond stocks, real estate remains a timeless wealth builder. Through strategic purchases, you gain tangible assets that can appreciate, provide tax advantages, and generate consistent rental income. It's a cornerstone for many wealthy families. A single property can offer multiple income streams, monthly rent, long-term appreciation, and equity build-up through mortgage paydown. Furthermore, depreciation deductions can significantly reduce your taxable income. Understand these levers. Smart leverage, like a low-interest mortgage, allows you to control a larger asset with less upfront capital. This amplifies returns. However, irresponsible leverage can quickly lead to financial ruin. Debt is a tool, wield it wisely. The IRS is a silent partner in your wealth. Understanding tax-advantaged accounts like 401ks, Roth IRAs, and health savings accounts can save you tens of thousands annually. Maximize these vehicles to accelerate your compounding. Your salary is taxed as ordinary income, often at higher rates. Wealth creators strategically shift income to capital gains, taxed at significantly lower rates. Holding assets long-term is key to unlocking this powerful tax advantage. Shift your mindset from being an employee trading time for money to an owner. Owners acquire assets, build businesses, and create systems that generate income passively. This fundamental shift is the core differentiator in wealth creation. Relying solely on a single salary is a significant risk. Real wealth is protected and grown through diversified income streams, investment dividends, rental income, side businesses, or royalties. Build a fortress of cash flow. The financial landscape is ever evolving. Continuous learning, adapting to new technologies, and refining your strategies are non-negotiable. The wealthiest individuals are perpetual students, always seeking the next edge. Stay sharp. Ultimately, your true financial power isn't in a single paycheck, but in the consistent application of sound principles. It's the discipline to invest, even when markets are volatile, knowing that the S&P 500 has averaged over 10% annually over decades. This isn't about getting rich quick, it's about exponential growth through compounding. Imagine if you invested just an extra $500 a month into a diversified ETF earning 8% annually. In 20 years, that could grow to over $290,000, far beyond your initial contributions. The biggest obstacle isn't market volatility, but inaction. Start by assessing your current spending, automate savings, and open an investment account even with a small amount. Your future self will thank you for taking that first decisive step today. Don't fall for the salary leap. Real wealth is a journey, not a destination, built on ownership, continuous learning, and consistent action. Embrace this path and unlock true financial freedom and the power to create a lasting legacy.